So Kalshi reported $871 million in trading on Super Bowl Sunday. This is a new record for Kalshi. And Bloomberg estimated around $1.2 billion in Super Bowl-related prediction market trading across all the platforms, including Kalshi, Polymarket, and the smaller ones.
Welcome back to another episode of The Weekly. I'm Graham Stone, joined by David Sencil, who is fresh off a trip to Hong Kong where he covered Consensus.
Woo!
Looking forward to your content coming out of there, David. I understand you worked on some pretty interesting documentaries, spoke to quite a few movers and shakers in the industry, and managed to get some trolling in.
I did. It was fun. Really fun. I can't wait. Hopefully it comes out this week. While the market's still down, is the best time to have that kind of content come out.
Yeah, Bitcoin currently trading $68,700. I've been waiting for that elusive 69,420 number. It's been dancing around there for the last couple of days. I haven't been able to get that screenshot, but hopefully we'll get that.
We'll get there. We'll get there.
We'll get there. Bitcoin did trade above 70K, pushing 71K, I believe, but has since come back off that. Anyway, let's get into some of the news of the week. So, David, your newsletter, as usual, another banger, going through all the big stories of the week. Anyone can, of course, subscribe to that for free at bitcoin.com/newsletters. Highly recommend it. It's like, it takes everything that's happening in crypto and condenses it into about a 5-minute read. And the awesome thing about it, David, I think, is that every single thing mentioned has a link to it where you can dive into more detail. So extremely well researched. It's become a staple for me as I start my work week here every Monday. So thank you for putting that together, David. It's awesome.
Well, you also contribute. So thank you for your service.
All right, so let's start off with a story about Deutsche Bank. So a Deutsche Bank strategist by the name of Marianne Labor is saying Bitcoin is no longer digital gold, and to support that, she points out that gold outperformed by 65% in 2025. Bitcoin declined by 6.5%. Now, David, I know that you're in the camp of never was digital gold, but anyway, this proclamation from a Deutsche Bank strategist does seem a little disingenuous, as pointed out by Eric Balkunas, who says, this is a fine argument to make, but to hinge it on 1 year's returns is absurd. Does this mean that it was digital gold in 2023 and 2024 when it was up 450%, but now it isn't because gold did better in 2025? Make it make sense.
Yes. And Balkunas, he had a follow-up post to this, which I thought was great, saying gold is no longer the risk-off hedge, i.e. Gold, because it's down 14% in 2 months, or down whatever percent in a couple weeks. Again, the time frame matters, and kind of cherry-picking a time frame to support what sounds like you started with a conclusion and then found a data series to support that conclusion. This is what this sounds like from the fine analysts at Deutsche Bank. Doesn't really make sense.
Yeah.
And I would say, just to clarify, I do think Bitcoin can one day be digital gold, but I don't think it has been up to this point. It has not.
Well, the mainstream media needs things to talk about, and I've noticed a lot of grave dancing over the last couple of weeks. This kind of falls into that category. Anyway, the adoption of Bitcoin marches on. So, case in point, we have bill proposed at this point coming out of Brazil, which is proposing a 1 million BTC allocation, which would be, if approved, the idea would be to purchase this over 5 years. So that would come to around $68 billion at current prices. Currently being mulled over in the Congress. David, in our pre-show, you said not in a million years that this would ever happen.
No, I don't think so. I mean, it's a similar argument that we had, almost exactly a year ago about the at that time, it was heating up about the Bitcoin strategic reserve, and
In the U.S.
In the U.S. And it's the same kind of game theory, which is, if this actually does get passed, then you know that there's going to be this kind of consistent heavy buyer. Then you're going to start front running it, right? And it would make it prohibitively expensive, maybe, for the government to do it. Although, I mean, with Brazil, maybe easier than if America were to say that they were going to do this. So maybe a little more realistic that Brazil's doing this, but still, 68 billion is a lot. It's a lot of money, and it's a lot for this kind of volatile asset. So I feel like the constituents in Brazil would be pretty upset about spending this amount of money on something like this. Again, this is not to say that I don't think that they would have a good return on their investment over, like, I don't know, 10-year time horizon. But as a government, you really have to, I feel like, make bets that have less risk, less volatility involved. So I don't think that this is going to happen, especially for a country like Brazil. What do you think?
Never. I mean, I just find it interesting that this is even up for discussion, that serious politicians in Brazil are debating this. And to me, that's the main thing. Whether it actually happens, yeah, I would agree with you that not so likely, or maybe it's a very watered down version of it. Anyway, contrasting this also from Brazil is a proposal, again, still proposal, to slap a 3% tax on stablecoin transactions. So there would be a personal exemption for individuals, like not businesses, who transact less than 10,000 Brazilian reals. So that's around $2,000 a month, a carve out for them. But businesses who are using stablecoins to transact internationally would be, according to this proposal, subject to a 3% tax.
This makes sense, I guess, for larger businesses. I don't know how this compares to their normal taxes, but you can imagine this being quite expensive if you have a business that's kind of transacting back and forth a lot, right? So a lot of it depends on how their tax code works now. But yeah, I mean, if it's under $2,000 US, that would probably cover most of the self-custody to self-custody transactions per month. And I think this is probably only going to be, so the law is broad, but then it'll only be enforced for the biggest parties that are transacting. So maybe like exchanges or very large businesses that are buying hundreds of thousands, millions of dollars worth of things from, let's say, China or something like that.
Yeah.
So that makes sense. But aren't they already being taxed? Aren't they already being taxed by something else? Like, is this an additional tax then?
I put this into this proposal into the camp of countries looking for ways to fight back against U.S. dollar dominance via stablecoins. They want to maintain their hegemony over their currencies, and this is a way to just put the brakes on the very quickly growing adoption of U.S. dollar stablecoins for international monetary flows.
Yeah,
That's we've seen
you.
many of these over the last several months, and we've predicted that we're going to see many more of these.
Yeah, I mean, I was just in Hong Kong, like you said, and off camera, I talked to several people about this who are kind of friendly with regulators or kind of working on this from the policy side. And I didn't know this, but right now there are a bunch of crypto ATMs. I think 300 just in Hong Kong alone, and until this April, that's been completely unregulated. There's no tax. There's no disclosure, as far as I can tell, KYC, AML. You can change U.S. denominated stablecoins into local currency in Hong Kong right now, unregulated. And so this is going to change in April. And I'm interested to see, again, how are they going to regulate this? Are they going to put a heavy tax on this? Is there going to be some kind of KYC, AML to do that? Hong Kong is ostensibly China, right? And so they want dollars, stablecoin dollars even. And so it sounds good to me for them. Again, like you said, it's very interesting to see how all these different jurisdictions are wrestling with the onslaught of U.S. dollar denominated stablecoins coming their way.
Absolutely. All right. Moving on to one more Bitcoin as strategic reserve story. For those who missed it, Binance has completed a $1 billion transaction to increase their Seifu fund holdings of Bitcoin to 15,000 Bitcoin. So their latest addition to it was a purchase of 4,545 BTC, finalizing the $1 billion transition of Seifu stablecoin reserves into Bitcoin. So Binance, perhaps in a PR blitz, Binance, of course, under a lot of fire recently for some of their questionable practices related to listings of tokens that are down only and like various other things, possibly related to the 1010 crash. Going on a blitz here, trying to get behind the community, the Bitcoin community, it seems, and saying, no, we're support the community. Look, we just bought a 5,000 Bitcoin or something.
What do you think? Is this good PR? Marketing guy, is this worth it? Is this a good spend?
I think it's good PR and also probably just a good investment. Like Bitcoin may not have bottomed, but it's probably near the bottom. So if you've got a big pile of stable coins and you want to put it in something, probably not the best choice to put it into like Fartcoin or some meme coin at this point. Bitcoin does seem like a good play in the current market conditions.
Yeah, I mean, it's an understatement that they've been under pressure from, I think, the industry. I mean, what was it last week? You had Novogratz. What was that 2 weeks ago? Novogratz going out on mainstream media, basically saying the market puke from October to February was largely caused by Binance. I mean, that just shows you where the feelings are for the market towards Binance and CZ are right now. So this is, I think, definitely they're on like this rehabilitation arc. I find it pretty transparent, and I don't know how effective marketing it'll be, but maybe they're just this is like outward facing. They've kind of given up on their perception within crypto. So maybe in that respect, it helps that for like your new user. But yeah, I agree. This is a good buying opportunity right now for a major holder like them. So I guess more power to them. Although I don't know how well that's going to do for mending their damaged reputation.
All right, let's move on to AI. That's all anyone can talk about these days with the release of Claude Opus 4.6 and what is it, ChatGPT Codex or something?
Yeah, Codex.
And everybody, of course, talking about all the agents. If you don't have an agent automating all your stuff, you're not going to make it.
Now, slave class.
As it relates to Bitcoin, there's a growing chatter that AI agents are going to be the next billion users of Bitcoin. And basically, the argument is AI agents struggle to get bank accounts, so they need like a digital native money. And so why not Bitcoin? Now, Joe Burnett, who is vice president of the Bitcoin strategy at Strive, which is a NASDAQ-listed company, said, as AI agents begin to escape, they will need permissionless money to ensure survival. Of course, there are counterpoints to this narrative of AI agents using Bitcoin. One of which, of course, is that the network isn't exactly scalable for them. So you'd think that they would use something faster. Nevertheless, this is a narrative that has been gaining steam. And there was a story here where someone basically, this is being reported as the first AI agent to set up a child version of itself using a virtual private server, funded with Bitcoin over Lightning, and it bought AI API credits, so like credits to be able to like fund its brain, I guess. and all without a human clicking anything. This is like an open claw bot. So perhaps a historical moment, or perhaps if we'll look back and it was just a nothing burger.
Yeah. I mean, I think the AI times Bitcoin narrative, I don't see that as a durable narrative. I don't know. It's just nobody transacts via Bitcoin really, right? As you said, even Lightning. So I mean, it seems it would be much more realistic if this is like, I don't know, a stablecoin on Solana or even Ethereum.
Yeah. So as it relates to Bitcoin, the AI x Bitcoin usage is all going to be happening over Lightning. Lightning Labs, another story here this week, launched an open source agent tool repository that lets AI agents run Lightning nodes, pay something called L402 gated APIs, host paid endpoints, and manage wallets via remote signers.
Yeah.
So
I think this is
here. Go ahead.
Well, I mean, it just seems to me that maybe Bitcoin people are trying to like glom onto this strong AI narrative, as everybody is. This is not just single out Bitcoin, but obviously they're trying to do it too. So it seems like just want to try to make sure that Bitcoin stays, I don't know, relevant in this AI onslaught. That's what that seems like to me.
Yeah.
Your agent's coming along, right, Graham? When Graham agent? Graham Clawbot agent.
Well, I live on a remote island, so it takes 2 weeks for anything to arrive here. So my agent's in transit.
Got to get that agent a Lightning wallet.
All right, let's move on to some Bitcoin crime. So a sentencing came down for a Bitcoin Ponzi scheme. The mastermind behind it is the CEO of Praetorian Group International, and he's been sentenced to 20 years in prison for running a Bitcoin-based Ponzi scheme that defrauded 90,000 investors of over $200 million. This happened between December 2019 and October 2021, and the company involved is PGI. They collected more than $30 million in fiat and over 8,000 Bitcoin valued at $171 million. And victims lost at least $60 million, according to prosecutors. So surprise, surprise, the masterminds behind this spent a lot of the money on dumb stuff. So 20 high-end cars worth $3 million. Penthouse, blah blah blah, Gucci, I don't know, a bunch of
watches,
brand name stuff.
Yeah, watches. Yeah.
Tasteless people.
And well, not just that, but also kind of unsophisticated. Because if I recall correctly, I think Zach XBT, the renowned crypto detective, he posted like shots from or screen grabs from like Instagram and whatnot. And they were just showing the stuff off. They're just showing these like kids showing the stuff off. So, I mean, great OPSEC. Very nice. Nicely done for the prosecution.
Mastermind is not exactly, it's a term used loosely here, basically.
Yeah, exactly.
Anyway, it's good to see that this Ponzi scheme was unraveled and somebody actually paid some consequences for it. Hopefully people get some of their money back at least. Gotta repo those Lambos, I guess. So another crime story. One's kind of interesting. So South Korean police do not know how to manage confiscated Bitcoin assets. They lost another 22 BTC from a cold wallet that they had confiscated, and they only found out about it years later. They just found out about it now. So the USB had been voluntarily surrendered in November 2021 during the investigation, and then they just realized now that it's empty. So this is the second time this has happened in South Korea. The other one was revealed in August 2025, and in that case, 320 BTC that had been confiscated was found to have disappeared. What's the term, David? Digital bearer asset?
Yeah, it's a digital bearer asset. It's basically once it leaves your possession, it's gone. There's no recourse. You can't get it back unless the counterparty like sends it back to you, and there's no other way to get it. I mean, I guess you could use physical duress to claw back the asset, but barring that, there's no way to get it back.
Yeah.
And so you've seen this in America. I think maybe a week or two we covered one thing where the federal U.S. Marshals, they lost some Bitcoin as well. Same kind of thing. And so
that in that case, it seemed like it was someone working there's kid, like figured out a way to hack it. In this case, what came to mind with this 22 Bitcoin being sold, like, yeah, here's my USB with the Bitcoin. Meanwhile, you have the keys somewhere else as well. I don't know. I mean, you
right.
Who knows?
Yeah.
Obviously, the first thing you would do if you took possession of it is move it to a wallet where you're sure that you have the keys. So then, if they didn't do that, like, they're not going to make it. So then I don't know. I mean, like, I guess corruption. What happened? Somebody found the key. Somebody saw the seized phrase. Somebody low-ranking South Korean police official saw it at some point and says, "Yeah, I'll take that."
Yeah. Or even better, you take a photo of the seed phrase, and then you go to like a I don't know, crime syndicate, and you're like, "Hey, give me a cut of this Bitcoin. I'm going to give you the seed phrase." Right? That's what.
Yeah, that's what I would do.
That's what I would do. That's exactly what I would do. Go find my local what's it called, DRPK agent, and see if I can't get some stables.
Okay. On a more serious note, because this one involves the potential for physical harm. We have another case in France, another attempted wrench attack this time. So France's head of Binance, David Princay, president of Binance France, was targeted, but not successfully. Basically, a bunch of thugs broke into his house. He wasn't there. They stole some phones, later arrested on a train. So again, not the most sophisticated people, but I don't know. More bad PR for France, I guess. Will love that.
Like I was mentioning, right? Like the one tried and true method of getting these digital assets is through physical duress, and so that continues to be kind of the one big exploit you can use is this, and so it is you got to be safe. I say this like probably at least once a month in the newsletter. You know, be aware of this kind of thing. It's not like a credit card, right? It's not like Apple Pay or whatever. It might live on your phone or whatever in your pocket like that, but it's not. It's like money. It's like money in your wallet.
No takesy backsies.
No takesy backsies, and lots of ouchie. And
all right.
Sorry. All right.
Let's move on to prediction markets, David.
Yeah. Let's go to prediction markets. Yeah. As the Zoomers say, lots of motion in prediction markets this past week, starting with the... I think I used it incorrectly. The Super Bowl, right? So a lot of headlines about prediction markets in the Super Bowl. The headline was basically, prediction markets surge past traditional sports betting and trading activity. This is partially true, as these headlines often are. So Kalshi reported $871 million in trading on Super Bowl Sunday. This is a new record for Kalshi. And Bloomberg estimated around $1.2 billion in Super Bowl related prediction market trading across all the platforms, including Kalshi, Polymarket, and the smaller ones.
By the way, David, just to interrupt quickly, I don't know if you saw some of the markets for these, but they were there was a lot of markets around things like, what is the set list for artists during the halftime show? And then there was controversy around, of course, insider trading on those markets. So not just, a lot of the markets are not like strictly speaking sports related, but these esoteric events related to the Super Bowl. So very interesting.
Exactly. So I was about to get to that. So if you look at, you have like the trading that happens like on Super Bowl Sunday for the actual event. But if you include the total week leading up to Super Bowl Sunday and all the related markets, it was about 2.79 billion on Kalshi and 1.92 billion on Polymarket. So approximately 6.3 billion across the entire prediction market ecosystem, including all these like peripheral markets, as you say. So analysts say that's one of the biggest appeals to this, is that appeals outside of traditional betting markets, like what do they call it? What are some of the ones? DraftKings and things like that. Is you have contracts around the halftime performances. They had contracts around the commercials and celebrity moments, right? Like is XYZ celebrity going to be shown on the Jumbotron or this kind of thing? And obviously, the regulated sportsbooks and sportsbooks apps don't cover these things. Having said that,
so the appeal, the USP, the unique selling point here is that you can have these like bizarre markets that just like I don't know, people find interesting to bet on, and it's a kind of a dark thing that you can bet on everything.
Yeah, I have an anecdote at the end of this that I want to talk about. Not an anecdote, but it's a side story. But so the headline was talking about how prediction markets have kind of stolen a lot of thunder from traditional markets. This is true, and you look at like Las Vegas. Vegas had about 133.8 million in volume. This is the lowest it's been since 2018. Obviously, prediction markets are part of this, but also the betting apps are a part of this, right? So the DraftKings reported, just DraftKings alone, 8 billion in potential payouts tied to the game. So that still, I think, dwarfs the entire prediction market ecosystem, right? Which was 6.3 billion. Just DraftKings alone reported 8 billion in potential payouts. So huge thing, and prediction markets are carving parts of this up, and obviously they'll make gains going forward, but it's still dwarfed by these kind of traditional sports books.
Right, but you just look at this chart that I've got up here on the screen right now. It's showing the staggering growth of prediction market volume from September 2025 to now. It's like 20x or something.
Yeah.
Going parabolic.
Yes, I mean, it's only going to continue, I think. One of the most interesting stories, I think I forgot to include this in the newsletter this past week, was, did you see, Graham, there's a smaller prediction market that includes betting on live traffic cameras? How many cars go past a traffic cam? And they're streamers who their whole thing is to bet on the over and under for number of cars to go past a traffic camera within a certain time period. It's
fascinating. I mean, as AI agents replace us all, David, and I don't even know for sure if you're actually a human at this point.
Definitely not.
You could argue that, humans' main function in the day-to-day will just be betting on things.
But it was interesting. So Eric Balkunas, he commented on this traffic cam betting, and he said, you know what? Once this rolls out to some of the high traffic traffic lights in my area, I'm going to start betting on this as a hedge against my frustration. So I mean,
that's a good. Yeah, exactly.
Right?
The more traffic there is, the more money I make. At least I'm winning in some way.
Exactly. It actually makes sense, right? You could hedge against just feeling bad. Pretty interesting in that regard. Okay, so the next big story. This is a quite serious story, maybe boring compared to what we just talked about. But Coinbase v. Nevada. Coinbase and Nevada regulators are in the courtroom fighting over the question, are event-based prediction contracts derivatives, which would be governed by federal commodities law, or are they bets, which states can police as gambling? And this has huge implications because right now you could argue that prediction markets are kind of a loophole where they don't count as gambling, and so they get to they don't states don't get to really kind of have their say and tax them and do all these kinds of things for them. So the Nevada Gaming Control Board started a civil enforcement action on February 3rd, accusing Coinbase of offering unlicensed sports and event contracts to Nevada residents. A state judge denied a ex parte temporary restraining order and set a court date. Coinbase, they sued in response in federal court, arguing that the Commodity Exchange Act gives the CFTC exclusive authority over these contracts, and this preempts states from interfering, right? So this is going to have, like I said, huge consequences moving forward. And it will, I think pretty much all the states are looking at this closely to see what they should do. Now, so if the Nevada Gaming Control Board wins, you'll probably see such lawsuits in every state in America be filed, right? Because there'll be a nominal precedent. And if they don't, you still could see this happen. But I wouldn't be surprised if this went to the Supreme Court, to be honest, because like you mentioned, Graham, the volume and interest in prediction markets is going parabolic, and I don't think states are going to want to sit by and not get a taste of this or have some kind of regulatory authority on what happens.
Yeah. Another state where there's an issue is Massachusetts, and they're basically the same thing. And in that case, Polymarket is suing the state in a similar way to Coinbase suing Nevada. But again, claiming that, no, it's the CFTC that has the jurisdiction, not the states. So, yeah, this is going to come to a head. The Supreme Court / the public, I don't know, it may even become an election issue at some point, is going to have to decide how they feel about this.
Yeah, definitely. And I asked AI, if this was kind of clear, who would win from a legal standpoint. And I was a bit surprised because at least the AI said, no, it's actually not clear. To me, it seems like, oh, yeah, this is definitely gambling, right? A reasonable person would look at this and say, oh, yeah, it's just sports betting. But when you get to things like, I don't know, does Taylor Swift appear 5 times on the Jumbotron? Is that sports gambling? Is that, yeah, hard to say. So, really, really interesting to see what happens here, and we've got to keep a close eye on this because it'll have massive repercussions moving forward.
Meanwhile, Vitalik Buterin weighed in on the matter to chastise us morally. Would that be the way to consider this?
Yes. So Vitalik, he spoke about prediction markets. I think, if I correct me if I'm wrong, but I think he did this before Ethereum even launched. Right? He was talking about the efficacy of prediction markets, and here he is now saying prediction markets have become like a degenerate, disgusting, speculative instrument that takes away money from idiots and gives them to smart insiders. That's a paraphrase. It's my paraphrase. But he basically said that the lofty goals and the kind of the real, I don't know, efficient use of prediction markets hasn't materialized yet. And it's just kind of like it's over converging on speculation and dopamine trading to maximize profit, and has little societal benefit. hard to argue with that, I think.
Yeah, I
But
mean, prediction markets taking the meme coin route here.
Yeah, definitely.
Seems very similar.
Except I think there's more product market fit for this because humans love to gamble. I feel like that's just kind of like something
that was the use case for meme coins as well. Just gambling on which meme do you think is going to get traction. In this case,
True.
maybe it's a bit more interesting because the events are so varied. Where with meme coins, it's quite like one lane, I guess.
Yeah, I mean, I saw some interesting posts in response to Vitalik's, just as a tangent, talking about how degenerate gambling has been with us for at least in the media, at least like 100 years, and like pointing out to different movies from, I don't know, 70, 80 years ago, where the protagonist is like betting on, I don't know, the number of times a number of birds that come down to get seed in a park, things like this, right? Like, so absolutely just crazy degenerate gambling. Vitalik, he breaks this down into, I think, 3 or 4 different market participants. You have smart traders who add information. Naive traders is the people who lose money. You have hedgers, and I think there's one more. There's like people seeking information, right? And so they want to use. They wanted to learn something about whatever market they're in. And he said that,
for example, we always look at what the Polymarket is going to say, what Polymarket's saying as it relates to rate cuts. What are the chances, right? Or
exactly.
Who's going to win the election? You want to know that, so you look at the prediction market. Well, the market knows best.
Not just that, Graham.
Mm-hmm.
These people, they actually seed money into these markets because they want to entice kind of people with inside information or even the general public to fill out the to make the prediction more robust, right? So anyway, you have all these different participants, and right now it's over indexed on kind of just people who are speculating, and he talks about ways to get more people who want to actually hedge investments or to kind of seek information on the market to get involved. I don't know. I'm pessimistic on this becoming. I mean, maybe with size, I guess this could become a thing. But people betting on how many times Taylor Swift is going to appear in the Super Bowl, I don't know how useful that is to anybody. I don't know.
It's entertaining.
It's entertaining. Well, yeah,
entertaining. But there was there was an interesting discussion on the All In podcast where they talked about this on the weekend, and they're saying like, look, with those types of markets, the prediction markets are just going to burn through their users, similarly to how meme coins burned through like retail, right? People. Because there's a small group of people who do kind of know the answer to that question, right? How many times Taylor Swift is going to appear on the Jumbotron? Like, you could imagine someone in the production crew there, like, influencing that market, right? And those smart traders will burn the people who don't have the inside edge, and eventually the users will just give up and move on and be like, okay, this is rigged, just like meme coins are rigged.
The big difference here, though, Graham, and this is a huge difference, is with the meme coins, you saw that they were the same people every time, or the same groups of people, right? There's like a small cabals that extracted money. For your example, that Jumbotron producer or whatever,
they're going to have shot.
They're going to have an edge one time, and then it'll be like that for every market, right? Like you'll have an edge in that very, very narrow category, but you're not going to have an edge most of the time because you just can't do that. So it'll be less extractive in that regard, I feel like.
Well, anyway, this whole prediction market thing is it's endlessly fascinating. Like very much look forward to watching this whole thing continue to unfold. And we will be covering it as usual and pontificating on what we think it means, not nearly as eloquently as Vitalik Buterin, but we'll do our best.
Yeah. Also, I just keep all this continually reminds me of our conversations about this for the past, I don't know, more than a year and a half. And again, one of my predictions was like, oh, after the elections, this prediction market thing will calm down for a while. Nope. Wrong. It's only gone up since then, right?
Yeah. Tapping in the prediction markets, tapping into the human nature, our propensity to gamble on everything. You could imagine the hunter-gatherer sitting on the hill, watching, predicting how many I don't know of their brethren are going to get eaten by jaguars or something. I don't know, whatever.
Or even like simpler, like they're throwing stones, and they're like, I bet you I can hit that wall and have it bounce off and hit the other wall. Oh yeah, you think so? Boom, prediction market right there.
What do you win?
So,
what does the caveman win?
Yeah, it could be a lot of things, but I'm not going to get into that right now. But I mean, I'm sure there was, if it was even just whatever, a pride, gentleman's bet.
All right, let's wrap it up there, David. Thank you as usual. Enjoyed this conversation. Have a great week, everyone. Stay safe.